Hi everyone, this is Ron Ianieri of the Investitute, and it's time for another one of Ron's Rants. Today's topic is the Trump rally. Now, I'm all big and for market rallies, don't get me wrong. But this Trump rally is a rally that you have to look at with caution. I think that Dow 20,000 or all the different multiples, market multiples and earnings multiples that these stocks are now carrying, as high as they might one day be justified. The only problem is, I can't see it being justified anytime soon. This rally is a scary rally. It's only based on hunches, rumors, innuendo, and straight out, flat out guessing. And that's not what really sustains a rally. Let me explain. From a business standpoint, when I'm looking at what the president needs to do, I am a Trump fan. I think that Donald Trump probably will put forth some economic policy, some plans into action that will help down the line. Do I believe that he's good for the banks? Yeah, I do. But not quite as good as the market is counting on. When you take a look at the run in the financials, we have stocks like JP Morgan, for instance, that was running at a 9 times earnings, now at a 13 times earnings. That's a huge jump. And at some point in time, it's going to have to be justified. Meaning that we're going to have to probably travel back to that 9 times earnings. One of two ways of doing it. Get earnings up high enough, or the stock has to come back. Now, the reason everybody is so excited about the financials under Trump is because they believe that Trump, being a businessman, doesn't like the idea of government intervention. Okay, I see that. I'm kind of with you on that. But there's another part of Trump being a businessman that has to be taken into consideration. He is not, in my opinion, going to completely rip up Dodd-Frank and tell the banks, have at it, boys. Wall Street, do whatever the hell you want. We don't care. No rules. The gloves are off. Enjoy. Not a chance that's happening. I'm not even sure if he's going to rip up Dodd-Frank. He might make things a little easier for the banks. But remember, Trump is a businessman that is a real estate developer. He always has needed the banks to be liquid enough to loan him considerable amounts of money for him to build and to grow. You can't have a bunch of banks in the type of shape that they were in back in 2009. And if you rip up all the rules and you decide there'll be no regulation, no one watching over their shoulders, they will very quickly be back in that condition because they are greedy and they are pigs. And they won't be in position to lend money to companies that are trying to expand, trying to hire people, trying to make America great again. There's no way that's going to happen. He's not going to rip those up because he knows that the banks need to be in a strong financial position in order for them to be able to lend, to back big projects, to back new up-and-coming companies. He knows the importance of these banks being stable. And he probably knows that better than he knows, just let capitalism rule. I think the market's making a big mistake there. Are the banks going to be a little better off? Yes, they are. Are they going to be this better off? No, they are not. In order to justify a 9 times earnings multiple, JP Morgan is going to have to come up with about $8.50 of earnings. That's about $2.25 a quarter. Well, let me tell you something. They haven't had a quarter where they made more than $160. And now all of a sudden they're just going to start making $2.25? Oh, no. That's not going to happen. At least it won't happen for several years. And I'll tell you right now, the market is not going to be that patient waiting for it. These stocks have to come back down. I think that Trump actually showed his hand a bit when he had his conversation with Boeing, when he tweeted about Lockheed Martin. Yes, he wants companies to make big money. Yes, he wants them to do super good here in the U.S. But like he said, not that good. Trump is a businessman. He might wind up spending more than the previous presidents have on defense. Right or wrong is not what's important. If he does spend more on defense, the thing you got to realize is he's not going to allow them to continue to produce only what they've been producing. If he said, hey, tell you what, last year we spent $1 million on you. This year we're going to spend 1.7. That sounds great. But instead of getting one ship for $1 million, I want 2 of them for 1.7. Instead of buying one plane for $1 million, I'll give you the 1.7, but I want 2 planes. He is definitely, for sure, no doubt about it, going to be demanding more for his buck. He's a businessman. He's not going to pay a lofty sum not to see production. So I'm starting to think that a lot of these things that we're seeing in the market are just way too optimistic. And do understand, they're shaky bets before reading into this. We don't even know exactly what Trump's policies are. And the funny thing is not only are we betting on what these policies will do and how effective they'll be, we're not even sure what the policies are. Come on. We're betting on bets. We don't even know exactly what the policy is, and they're trying to figure out the effectiveness. I have a feeling that this Trump rally is very optimistic, might be looking at a little more of the long term, but I don't think the market is going to be able to wait for these Trump policies to take effect and grow earnings as much as they need to be grown. And like I said, I could be wrong. This is just one man's opinion. However, when I look at what he did with Boeing, and I look at what he did with Lockheed Martin, both of those companies, as soon as they heard Trump won, boom, they're off to the races. He will spend more money in national defense than Obama did, than maybe even Clinton did. I mean, go all the way back to Clinton. He's probably, maybe even Bush. He might spend more money in national defense per capita than any previous president in history. But he's going to want a hell of a lot more. And when I sit there and think about how that goes to the banks, and you say, hey, Ron, why are you so, why is the banks the focus of the conversation here? Well, Goldman Sachs alone was a quarter of this rally. Throw in JP Morgan and Citibank, the financials probably represent about half or even a little more than half of this rally. If they come in, the market's going to be coming in. And I think that's what we're going to see. I think that Trump is not a stupid man. He's a billionaire. He's also an incredibly experienced person. He's had companies that failed. He's had companies that have done great. He knows both sides of the coin. And I don't believe for 1 second that he's going to come in and create a capitalist environment where everyone's just allowed to do whatever the hell they want. No chance. He's already told the biotechs, you're going to have to lighten up on your drug prices. He's already told Boeing and Lockheed Martin, you know what? That's starting to get a little too pricey. Time to move it down. Remember, his own words is, I'm a businessman. I am a negotiator. That means he's going to work on lowering prices also. With these banks, he will give them more room, no doubt about it. But he's not going to give them unlimited ability, carte blanche, to do whatever they want. Because he knows that if he does, those banks, give him 3-4 years, they will find an area to overinvest in, over-leverage themselves in, and blow up again. And that is not conducive to making America great again. And he knows it. So, proceed with caution. A correction is coming. So thanks for spending a little time with me on the latest one of Ron's Rants. Tune in for our next one, courtesy of the Investitute at www.investitute.com. I'll see you there.